And relive content provided at the event is for general information only, not intended to provide specific advice or recommendations for any individual. Any performance reference is historical, no guarantee of future results. All indices are unmanaged, may not be invested into directly. Any economic forecast set forth during the event may not develop as predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities are offered through LPL Financial, a member of FINRA and SIPC. Investment advice is offered through Gimbal Financial, registered investment advisor, and separate entity from LPL Financial. Good morning.
Good morning. That's a vicious looking dog you've got there.
He is a gentle giant. And that disclaimer is valid, the beware of dog, because he's out roaming in the house randomly. So if he does pop in, you've been warned. But I get to hang with Wallace, the Great Dane, today. So that's Wallace.
Where I'm at. That is a good name for a Great Dane.
I know.
Notice how Amanda slid that in there. She's hanging out at the house today. Did you notice that?
I did, but it's not her house.
Oh, it's not? Okay. I thought she was at her house. So.
Hey, have you guys ever seen the movie Elf?
Oh, one of my favorites.
You know, where, it all goes wrong and the storyteller, he leaves, he's upset, and he leaves behind his pitch book. And they find it and they create all these great ideas. Well, I'm here at Keith's desk and I just found Keith's market tracking book. And I'm going to blur this out because it's, not compliance approved, but man, Keith, you keep great notes on stocks.
I'm very curious.
This is your pitch book. I might have to go buy some stuff. Wow.
And none of those I can recommend on this show, but call me anytime. I'm happy to talk about stocks.
I was just being nosy.
Yeah, it's all good. I need to get off this screen though. Now that I look at
you look at that. I've got like a jam-packed full of ideas myself. Where do you guys want to start this call today?
I can.
Why don't you kick us off, Amanda? We'll follow your lead.
Well, I was pretty jazzed this week when I didn't receive a COVID tracker, but instead I received a recovery tracker from First Trust. It's the little things in life that can get us excited. But I'm a visual person. There's just a handful of graphs in this PDF here, but this comes from our trusted friends at First Trust. And what I realized, so these graphs are tracking like the American Staffing Association weekly retail sales. There's two more up here, initial jobs claims, just a handful of things. And most of them compare them between 2019, 2020, and 2021. And as I look at these, my first take is that most of the 2021 is tracking almost identically to 2019. So as you can see, obviously 2020, we took a downfall in a number of these graphs, flights, TSA pre-check, even retail sales, box office. And so many of these in 2021 now, this darker blue graph is from 2021 and the gray is 2019 and the orange is 2020. And so much of the 2021s are tracking parallel. If not, if you are in the weekly retail sales, it's even better than they were in 2019. So this just tells me there's so much optimism. There's so many things happening out there. Things are improving. We are truly on the trend to recovery or of recovery at this point.
Yeah, I was looking at another one of our research partners. We have some great research partners out there.
We do.
But one of them is a group called Bespoke, and they keep track of analytical data and kind of macro trends and opinions. And they highlighted Google searches.
Oh, wow.
Which I thought was interesting. Not only were they tracking Google searches across the United States, but worldwide. And just for the phrase COVID vaccine in the United States, the Google search COVID vaccine has dropped off 60% since mid-March. And the other country that's seen a real drop off in that search is Brazil. And Brazil's Brazil's economy, or at least from a macro view, they're doing really well right now. They're one of the top 5 performers in ETFs this year. Now, India and Japan, they're seeing increases in Google searches for COVID vaccine. So it's good to see, the progress that we've made here, but a couple countries overseas aren't doing as well.
Yeah, I mean, just the idea of a vaccine just a little over 12 months from this thing being a scary, non-identified thing to having mass quantities of people vaccinated in, what's that, 15 months? Like, that's just amazing. Like it is, I was singing the praises of capitalism last week, but it's just phenomenal that happened. Like it's just mind-boggling.
Well, I think I saw today that Pfizer was looking to aim for approval from the FDA as well. And so I think there's just more and more confidence is building, and there's more and more people who have it and have been the test pilots. And so that's been good.
Yeah, it's been amazing.
Something good. That's what my cup of coffee says. So this is something good.
My cup of coffee, I can only hold it up this high because it may not recommending a specific company or something. So we'll.
And mine is, I just want to go on a sailboat. Anybody have a sailboat? Let's go.
Shout out to Ken Moore.
Right on.
Hey, last week we spoke a little bit about one of the major technology companies and their earnings announcement. And we've been in earnings season right now, and would you just say it's been an unbelievable earnings season? I mean, of the companies that have reported, like 85% of them have had increases in their earnings and a low 70% growth rate on sales, which is just sick.
Yeah,
it's unbelievable. And we haven't really seen stock prices shoot up, have we?
No.
I haven't seen many gaps.
No.
In a gap is just like an explosive upward, from the previous night's close, or it could be a gap down, which that's not a lot of fun to participate in. But some of these major earnings, like we saw and talked about the technology company last week, and there's really a handful of technology companies that drive the NASDAQ or the S&P, and those all kicked it. I mean, their earnings were amazing, but April wasn't that great for them.
Capitalism and the free market is not an easy place to dwell. Like, you might think you're doing well and then get smacked in the face by those who are, gauging your success or not. The market is what gauges leaders in the marketplace's success, and it sometimes does opposite of what you're thinking. I was talking to a young businessman yesterday that he had $100,000 loss on his business. He's a young guy, and he's frustrated about that, and so me being me and the smart aleck that causes everybody to want to punch me, is I said, the nice thing about $100,000 loss, it prepares you for years ahead when you can lose $1 million and understand how to process through that. And that's part of capitalism that capitalists don't understand. They only see that capitalists make profits, but with capitalism, you have 3 choices. You can make a profit, you can break even, or you can lose money. And probably the masses of capitalists lose money. They go out of business. And so
it's true
to focus on those who've had success and learned how to lose 100,000 or $1 million or 10 million. One of my friends that was with a large corporation, one time I was having breakfast with him, and he was responsible for being able to lose more than $100 million. Like, he had the responsibility in that corporation to make the decision that could be $100 million loss or gain. But with that, he had to lay awake at night, stare at the ceiling, and be willing to lay off people in mass quantities because they were taking that amount of risk. And so when you hear the media talking about people make too much money, that's how I'd frame it. How much money would it cost for you to lay off, say, 10,000 people? How much would you have to be paid to do that? And that's what we're talking about, is that this capitalism is rough. It's not easy.
No, it's definitely not easy, and it's totally unpredictable. And you say it all the time. I don't know if you're the first to tell me, but everything is speculative out there. And if you're a business owner and you're making decisions right now, it's speculative time. If you have to think about, well, I've got 3 floors that nobody has been in for the last 12 months, that's a speculative move. Do you make the move and just say, hey, we're shutting it down?
Right.
I mean, there's a lot of decisions being made right now. And that one alone fascinates me. I can't wait to see how that one plays out in the next few years ahead.
Yeah, and the backdrop, what I just threw, the negative of what you were saying was all the earnings that went up. Somebody a year ago, when everything was doom and gloom, had to make the decisions to bring the earnings that are happening now, right? Like they could have pulled the plug, they could have gone in the corner and cried like a baby. They could have done a whole lot of things. But to get the earnings that are happening today, somebody had to put their emotions aside, sit down, look at the future, and make the best decision they could about what they think their business model
at
can
that
do.
moment in time.
Yeah, and there's plenty of people that after the Monday Night Football can come in Tuesday morning and tell you what you should have done if you're the coach of that team. But those ladies and gentlemen that are leaders and are able to make those decisions in those highly charged emotional moments, that's a big deal.
Yeah. What do we want to look at the markets today? I've got a couple of interesting things just on the broad-based markets.
Yeah, you lead, and then I'll go more specific then.
Okay, so
what do you want me to go to?
Let's start with the NASDAQ. This has just been wild. It had such a great run up, and I'll just talk in a frame of reference from 2020, all of 2020 through the end of April this year. You don't have to change the date or anything, Keith.
No, I'm just showing this line here is where the 2020 started.
Yeah.
And then you said to the end of April this year?
Yeah. And it's
so that's all the way to right about here.
Yeah, it's just been unbelievable. Now go to that February high. Was that February 21st, 14? Where is that? 12th?
It must be this red day here. Nope.
So we had
we
had a high in the NASDAQ back in February.
Yeah.
And a lot of people don't see that.
Right.
Hey, the stock market's up. It's going gangbusters. Well, which market are we talking about? And so when you look at the NASDAQ right now, the NASDAQ just has been pretty weak and tried to rally back up, but it's really struggling to get back around that. It can't really get over that 14.2 line.
Yeah.
And so it's showing some real weakness here. Keith is highlighting the relative strength line, which tells you that comparatively to other stocks and market, it's just been on a downtrend. This is comparing the S&P 500.
Yeah, it's compared to the S&P. So probably most of that time from when the market bottomed out till maybe just probably until the middle of February, you would have better off to have been heavily weighted in those sort of stocks that were in the NASDAQ. And that wasn't an easy ride, because if you
September was
if
September
you went
2nd.
to right here about the 2nd of September and all the way over to probably here in November, we had more than a 10% drop in that thing, and it was a wild bronco during that time, and we talked about that then. But this market is definitely that word that all the gurus in the industry throw out is bifurcated, and that just means it's acting differently in different segments.
If you're a fan of sports, you love to see rotation and teams, doing well, and then another one emerging. And it's been fascinating to watch the stock market this past year and a half. And let's switch over to the S&P 500. And so the S&P 500 has just been killing it. I mean, comparatively, look at the high around 212 on the S&P 500. There you go. And then compare it to where it is today.
Yeah, so it is 3,900 and you're up to 4,200. So you're up 7 or 8% from then where the NASDAQ's down.
Yeah. And so, one of the things in active management, which Gimbal Financial does and we believe in, is there's times where we want to maybe overweight an area, underweight another, or even be in cash. And so if you've been sitting in cash on a portion that could be allocated towards technology or the NASDAQ, that's worked out pretty well for you. And so it seems odd to say, oh, why am I in cash? I'm 35 years old, or, maybe, it's been a good time for a portion of your money to be out of the market or out of a specific area of the market. And so this is just a nice comparison to see what's working and what's not. And specifically over the last, 16 months or so, it's just been an amazing thing to be a spectator of.
Yeah, and I'll point this out, Doug. I changed the date on these indices to January the 1st of 2001, which, we're 20 years out from there. And so the pain of 2001, 2002, 2003 is kind of like the pains of when I scraped my knee as a kid, as I don't remember all those scabs and things, but I would use this to really think about assets that you don't even have with Gimbal. Like if you've got 401k money or assets other places, it's probably a good time right now to reevaluate how your money is situated. Because if you look at the NASDAQ here, it ran like crazy from this time in October of 1999. It almost doubled between October of 99 and March of 99. And it then began to drop like a rock. And so the fear and greed are those components that cause people a lot of times to make bad decisions or no decision. And there's clearly activity on that chart that would suggest that you might make some decisions. Well, I'm just going to change this over to the S&P 500. So you see that thing drop like crazy right around March there. The S&P was dancing around a lot, but it wasn't in a trend going down quite as dramatically as the NASDAQ was. And so when you have markets that are topping out, I don't know that the NASDAQ is necessarily topping out right now, but it's definitely offering a time for investors to reevaluate their allocations. I think it's wise to consider that.
And there's been a lot of zigzagging going on, volatility. Like even in different areas, we talk about the commodities from time to time. I would have thought gold would have done really well this year. Yeah. It hasn't. The most wild one that I've seen is a friend of mine suggested I take a look at copper. And so I started to look at copper. Copper in the last year and a half has seen a 10-year high and a 10-year low all in a year and a half's time. I mean, that's nuts.
One of my offspring is a conspiracy theory person. So we often, I don't know if any of your friends are conspiracy theory people, Amanda, but I don't know what that's all about. But I hear some funny stories at the dinner table from time to time. But I would think that anybody that's telling you that there's no inflation out there, right, is probably not being forthright with you. I thought I would show some examples of that while we're looking, like you mentioned copper or some other things. But I just want to show you how this market changes direction. And I'm going to go with indices. I prefer individual stocks, but the indices, I can show you some pictures of what this looks like. So the computer software area really did really well in 2020. And then you can see we're over here to the right where that's probably that February 12th day, or it's real close. It peaked out on the 16th. It peaked at the very next day. And then it's trended downward. And then our software breaks it into different segments of computer software. So this is education and media. You can see it's done even more poorly than the previous one. And all these stocks that were leaders in 2020, or these are indices, all these areas that were leaders are really struggling in 2021. And so it's the idea of why you might need to reevaluate where your money is situated, because somebody that probably, if you thought, if you picked a computer software in the medical thing and did really well last year with it, somebody smarter than you has been getting out of it. If you look over here to the right of the screen, you see these large volume red bars. That's telling you some institutions, whether they're private equity money, whether they're mutual funds or ETFs, they're coming out there, and it's giving an indication that maybe, you look at it here, this thing peaked out from the bottom, it doubled in like, what's that, 60 days or something?
In no time at all.
Yeah. And then it went up another 25% to this high. But here we are now, less than the double out here today. So you've gone nowhere for most of the last year in that particular area. And that's true with the computer software area of the marketplace right now. So I wouldn't, if you're looking at my notes a while ago, that's probably not one I'm looking at to add to right now. Let me throw out some other ones here that kind of go with what I was saying about conspiracy theory and whether or not there's inflation. Here's the paper and paper products. We had
You see, I love stuff like this because this is like the dead industry, right?
Yeah.
I mean, you switch to a Kindle and then you switch to your iPad and I mean, who needs paper anymore? Well, everything that's shipped to you does.
Yeah, thank you, Amazon. Right? Well, and we don't have to get dirty here. But I think this was the toilet paper shortage.
Yeah, it could be. Yeah.
And so we almost doubled last year. And then you can see where the people, they got their stockpile of toilet paper over here. And then now there's no toilet paper being sold because people have their basement or their attic or wherever they put the toilet paper, and it flattened out. But what happened in that same time horizon is people started nesting, right? They started adding decks on, building rooms on, and all of a sudden the demand for lumber shot up. And guess what?
That's right.
Where does paper come from? So
it's just all supply and demand. I know we talk about this every week, but supply and demand never gets old.
Yeah. And so somebody can tell you there's no inflation, but they can't stop the price of paper going up, right? And maybe you're not using a lot of paper, but that paper is used in packaging and things that you're buying, and the distributors are not going to swallow. They're not going to lower their profit margins significantly. At some point, they're going to pass that on to us as consumers. Let's look at another one here real quick. I thought this one was, I mean, it's almost the same picture. Who would think you would triple your money in cement? Like what? That's inflationary. If you're building a house, your cost of your house is going up because cement's gone up and wood's going up. All these things have gone up. I was talking to somebody that was trying to buy a sofa. One of my neighbors trying to buy a sofa, and there's a shortage of sofas because they build them with wood.
I can't remember what our friends, the Getchell brothers, told us, but they said just a sheet of plywood has gone up dramatically. Whereas on a rainy, muddy day, 2 years ago, they would throw it down at a construction site so they could walk on it and not get their boots muddy. That stuff's like, well, it's not, I would say it's like gold, but gold's down. It's like very valuable.
Yeah, I saw that. I saw some picture where a guy had a sheet of plywood go through his Banger car, and that they're going to call an insurance claim. He goes, "No thanks, I'll just I'll take the piece of wood."
Hey, when we talk about everything being speculative, and we talk about it all the time on this show, I think for a lot of people right now, some of the feedback I'm getting is what is safe.
Yeah.
And I'd like to talk about, can I talk about bonds for a second? Or do you want to hit this one?
Let me hit a couple more and then we can go. Okay. So I'm just showing you why inflation is not dead. You talked about copper. Steel has more than triple, quadrupled since the bottom. I'm like, who would think steel is a place to invest?
I love to see that one going up because there's some great companies in that list, and Indiana has benefited from some of those.
Well, and all this has gone on while everybody's been hyping the Bitcoin plays out there, like
right. Which have just been unbelievable.
Yeah. I mean, it's unbelievable. We are not endorsing Bitcoin.
I'm not endorsing. I'm a little jealous, but I'm not endorsing.
Greed is not a good thing, but that's contrary to that old movie, isn't it?
Yeah.
I just thought I'd show you this because I know Doug was pointing out that the metals haven't really participated. They've gone. I mean, they've doubled from where they were a year ago, but
the expectation.
Yeah, they look to me like they're really starting to get interesting to me, but we're not recommending those. We're just you know,
Yeah,
pushing
I
up.
mean, gold and silver they both had good Aprils.
Yeah.
But the past 16 months combined, not so hot.
Yeah. Yeah. What are we looking for, Doug?
Well, we don't have to pull up a chart of it, but
Okay.
I was searching through several different bond funds. You know, many of you have 401ks and you're looking for what is safe? What portion of my money should I have in safe? And there's just not much that's safe out there. If you look at bond fund prices, like just looking at the 20-year treasury, and the year to date, it's down 12%.
And I don't know. I mean, I'm not a big bond person, so I didn't necessarily listen to Janet Yellen's comments this week. But that people were earlier. Powell was saying we weren't going to have rising interest rates for many, many months, and then when Janet Yellen was saying that they may be coming sooner than you think, and so that'll make bonds even. They'll make them something that people haven't seen in many, many years. I remember the early 90s, there was a bad bond market, but that was when interest rates were probably 8%, and we're well below that.
In the last year and a half, they're down 16% on the 20-year.
Yeah.
And so, hey, if Yellen's saying there's going to be increases in rates, that's probably a good thing. That probably tells us that the economy is doing what it's supposed to be doing, and it's moving up. And so, overall, I think that's okay. But if you've got a question about safety in your portfolios, we're happy to talk to you about it. There are not a lot of answers out there for you, though. Besides, well, I don't want to get into that, but call us individually if you have a question about safety.
What did the skateboarders say? If you're taking up more than the edge, you're taking up too much space or something. But like just taking risk in life is. Risk is such a squishy idea, and our industry and the media has been guilty of defining that risk is something that's really easy to walk through, and it's just not. You can't avoid risk, and so we'd rather just talk to you about what risk is, what possible risk you have with the quantitative components. But a lot of times your risk isn't even quantitative. It's if you're living in fear and anxiety, you might be missing out on life, and we're all for living life to the fullest.
Yeah. I like what Bob Goff says. Do you remember?
No, I don't recall.
He likes to live on the edge of yikes.
I'm not quite there.
I don't know. It kind of looks like it on this other picture I'm seeing.
Well, somebody sent me this picture. I'm going to share this screen with you. You might have seen this one, Amanda. These were two high-end race car drivers here, and all I could think about is the driver in front, and this is no conspiracy theory, is inflated compared to the one behind. And what inflation tends to do is slow down your progress. You may see bigger numbers, but you're not making real progress. And this driver behind here, he actually taunted the one that was in front.
In a very kind way.
Yeah, he was a gentle soul. And I felt like, being the inflated driver in the front there, I felt like I was doing the best I could do. But this youngster behind me was kind and compassionate and gave me tips to speed up, as though I might even get close to him. But I was trying to point out to him that I was packing a few extra pounds, and then he had these little discs on his car that he
each weighed 10 pounds.
How many did you show us? 5 or 10? I think he went to 10. I got these 10 discs that weigh 10 pounds, so that equalizes. And I'm like, you know what? It doesn't even come close to equalizing us. So,
yeah, Indy, in case you're watching today, thanks for the tutorial at the go-kart.
I had a blast with it. Yeah, that was a good run. But yeah, I think that's what you'll see, just like that picture. You may not, if you're not paying attention, inflation will slow you down. And I didn't notice it when I went from my 30-inch waist to the 36-inch. And it took a slow person and made him slower. And so as we're pointing out, probably the last month or so, we've been pretty consistent in pointing out inflation is real out there. So Amanda, you gave me one last thing. I'm surprised. I don't know that we have any clients that have passed away from COVID. I haven't seen that in any of our things, which is really unusual from all the data we see. But there, you gave me who's eligible. The FEMA, the Federal Emergency Management Association, something like that, I forget what FEMA stands for, has resources available. If any of your loved ones have passed away from COVID, there are procedures for which you could get some help in paying for the cost of that funeral. So we saw that out there. That might be pertinent to some of you. If it is, our hearts go out to you. It's a very difficult thing to journey through the loss of a loved one, particularly in an unexpected manner.
Right.
Yeah. That's it.
Well, it's great to see you, Amanda. Doug, any last words?
If you need some optimism, give us a call. I've got more fun data about Biden's first 100 days. I'll leave you hanging with that. It's pretty fascinating. If you'd like to learn more about it, give me a shout. I'd be happy to engage with the conversation.
Y'all have a great weekend, and we'll see you the next time.
Bye. Thank you.